Hello, everyone. Welcome to the market opening bell on Friday, November 14th, your 10-minute guide to the stock market. The U.S. House of Representatives passed the Senate's previously approved temporary appropriations bill with 222 votes to 209, which will now be sent to U.S. President Trump for signing, ending the federal government shutdown. Hong Kong stocks fell first and then rebounded. The Hang Seng Index opened 143 points lower, once dropping 189 points to a low of 26,733 in the morning session. In the afternoon, driven by Alibaba's upward momentum, the Hang Seng Index reversed to gain 150 points or 0.6%, closing at 27,073 points, marking 4 consecutive days of gains, cumulative increase of 831 points or 3.2%. The China Enterprises Index rose 60 points or 0.6%, closing at 9,599 points. The Hang Seng Tech Index rose 47 points or 0.8%, closing at 5,981 points. The total market turnover for the day was $270.6 billion. Southbound trading turnover total $124.9 billion, with Southbound funds net selling Hong Kong stocks by $3.5 to $1 billion. Among them, net buying Alibaba at $1.375 billion, Xiaomi $0.779 billion, net selling Tracker Fund at $6.227 billion, Hang Seng China Enterprises ETF $2.289 billion, Tencent $0.875 billion, Innovent Biologics $0.419 billion, Ganfeng Lithium $0.261 billion. According to statistics, Southbound funds have net bought Xiaomi for 12 consecutive days, totaling $8.915 billion. As of November 11, 2025, Southbound funds have net inflows of 1,214.7 billion yuan year to date, up 109% year on year, significantly higher than the 581 billion yuan in the same period last year. As of the end of October 2025, the market capitalization of mainland-related companies accounts for 80.59% of Hong Kong's total market cap, and turnover accounts for 19.97%. This year, Southbound funds account for 23.6% of Hong Kong's average daily turnover, higher than 17.3% in 2024, 14.1% in 2023, and 11.8% in 2022. It's expected that Southbound net inflows will reach 1.3 trillion yuan in 2025, mainly due to increased choices in high-quality tech, high-end manufacturing sectors, attractive Hong Kong stock valuations, and high dividend yields. The Stock Connect mechanism will be a key long-term driver for re-rating Hong Kong stock valuations. Among the 19 stocks with the highest Southbound inflows this year, only 2 recorded declines, Meituan and Li Auto, with year-to-date declines of 32.8% and 15.2% respectively. The top 3 gainers are Hua Hong Semiconductor, up 247%, Guotai Junan International, up 184%, and Pop Mart, up 150%. The 3 major A-share indexes opened slightly lower but gradually rose, with turnover slightly increasing from the previous day. The Shanghai Composite Index closed at 4,029 points, up 29 points or 0.7%. The Shenzhen Component Index closed at 13,476 points, up 235 points or 1.8%. The ChiNext Index closed at 3,201 points, up 79 points or 2.6%. The combined turnover of Shanghai and Shenzhen markets was 20,464 billion yuan. The renminbi central parity rate against the US dollar was lower by 32 points to 7.0865 per US dollar. The People's Bank of China announced that renminbi loans increased by 1.497 trillion yuan in the first 10 months of 2025, less than the market expectation of 1.525 trillion yuan. For October alone, new loans were about 220 billion yuan, missing the expectation of 500 billion yuan and lower than September's 1.29 trillion yuan. The cumulative social financing scale increment for the first 10 months of 2025 was 3.09 trillion yuan, 383 billion more than the same period last year, but slightly less than the market expectation of 3.1255 trillion yuan. For October alone, the social financing increment was 810 billion yuan, below the expectation of 1,228.5 billion yuan, marking a new low since July last year. At the end of October, blocked money M2 grew 8.2% year-on-year, higher than the market expectation of 8.1%. Narrow money M1 grew 6.2% year-on-year, below the market expectation of 7%. Currency in circulation M0 grew 10.6% year-on-year. October's financial data shows continued weakness in credit demand, with new increments far below market expectations, reflecting insufficient economic recovery momentum, but improved fund activation and one growth rebound. The cumulative social financing increment for the first 10 months remains relatively stable, but structural adjustments are evident, with government bond financing proportion rising, substituting for traditional bank loans. Alibaba surged in the afternoon with reports claiming that Alibaba has secretly launched the Qianwen project to fully benchmark ChatGPT. Alibaba's core management views it as the future battle in the AI era, hoping to win the competition through the open-source technology advantages of Qianwen. In response, Alibaba stated it has no comment on this news for now. At the Baidu World Conference, Baidu unveiled its new generation of self-developed chips, Kunlun Core M100 and M300. The M100 targets large-scale AI inference and is expected to launch in early 2026. The M300 is for ultra-large-scale multimodal large model training and inference, expected to launch in early 2027. Additionally, the latest data shows that Radish Express has exceeded 250,000 fully unmanned orders per week, with global ride-hailing service trips surpassing 17 million, becoming the world's number one. Its services cover 22 cities worldwide, with fully unmanned driving mileage breaking 140 million kilometers and total autonomous driving mileage exceeding 240 million kilometers. Tencent announced its Q3 results after market close on Thursday, with revenue rising 15% year-on-year to 192.869 billion yuan, beating the expectation of 188.8 billion. Net profit of 63.133 billion yuan, up 19% year-on-year and 13% quarter-on-quarter. Basic earnings per share of 6.952 yuan. Adjusted net profit up 18% to 70.551 billion yuan, significantly beating the expectation of 66.03 billion yuan. Value-added services revenue grew 16% year-on-year to 95.9 billion yuan. Domestic games revenue was 42.8 billion yuan, up 15%, mainly due to revenue contributions from recently released games like Delta Force, growth in evergreen titles such as Honor of Kings and Peacekeeper Elite, and the expansion of Valorant from PC to mobile. International games revenue was 20.8 billion yuan, up 43%, driven by revenue growth from Supercell's games, contributions from recently acquired game studios, and sales performance of the new PC and console game Dying Light the Beast. Social network revenue grew 5% to 32.3 billion yuan, benefiting from increases in video account, live streaming revenue, music paid subscriptions, and mini-game platform service fees. Marketing services revenue grew 21% to 30.6.2 billion yuan due to increased ad impressions from higher user engagement and ad loading rates, as well as eCPM growth driven by AI-powered ad targeting. Ad spending from all major industries increased this quarter. Financial technology and enterprise services revenue grew 10% to 58.2 billion yuan. Fintech services revenue grew in high single digits year-on-year, benefiting from increased commercial payment activity and consumer lending services revenue. Enterprise services revenue grew in the teens percentage points, driven by cloud services revenue growth and merchant technology service fee revenue from expanded WeChat mini store transaction volumes. Q3 gross profit grew 22% to 108.8 billion yuan, with gross margin rising from 53% in the same period last year to 56%, mainly due to increased contributions from high-margin revenues, such as certain self-developed games, video account, and WeChat search marketing services, as well as improved cloud services cost efficiency. Tencent stated that strategic investments in AI not only benefit business areas like ad precision targeting and game user engagement, but also enhance efficiency in programming, game and video production. The company continues to upgrade the Hunyuan-based models team and technical architecture, with Hunyuan's image and 3D generation models at industry-leading levels. As Hunyuan capabilities improve, investments in promoting Yuanbao adoption and developing AI agents in WeChat will bring more positive progress. JD.com Group reported Q3 revenue of 299.1 billion yuan, up 14.9% year-on-year, exceeding expectations. Among them, daily essentials category revenue grew 18.8% year-on-year, about 4 times the industry average growth rate. Supermarket category revenue achieved double-digit growth for 7 consecutive quarters. Apparel and footwear category revenue growth was about 8 times the industry rate. New businesses like food delivery saw Q3 revenue grew 214% year-on-year, accelerating from Q2 quarter-on-quarter. Services revenue grew 30.8%, a new high in nearly 2 years, with revenue proportion further rising to a historical high of 24.4%. Q3 net profit was 5.276 billion yuan, down 55% year-on-year, mainly affected by strategic investments in new business like food delivery and a significant increase in marketing expenses, but beating the expectation of 3.39 billion to 3.994 billion yuan. Full-year guidance maintains revenue growth of 15% to 17%. SMIC announced Q3 revenue of 2.382 billion yuan, up 7.8% quarter-on-quarter, better than the prior guidance of 5% to 7% growth. Net profit of 192 million yuan, up 28.9% year-on-year and 44.7% quarter-on-quarter. Gross profit of $522 million, up 16.2% quarter-on-quarter. Gross margin of 22%, up 1.6 percentage points quarter-on-quarter. Capacity utilization rate rose to 95.8%, up 3.3 percentage points quarter-on-quarter. For Q4, revenue guidance is flat to up 2% quarter-on-quarter. Gross margin guidance was 18% to 20%. The revenue guidance meets market expectations, but the gross margin decline raises concerns. The U.S. federal government ended the longest shutdown in history, but tech stocks were sold off again, with U.S. stocks plunging sharply. The 3 major indexes saw the largest one-month drop, and the fear gauge VIX index rose 2.49 points or 14.22% to 20 points. The Dow closed near its daily low, down 797 points or 1.7% at 47,457 points. Nasdaq fell 536 points or 2.3% to 22,870 points. S&P 500 fell 113 points or 1.7% to 6,737 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, fell 129 points or 1.6% to 7,983 points. Tesla fell 6.6%, Nvidia down 3.6%, AMD, Broadcom, Oracle down over 4%, Palantir down 6.5%. Alphabet and Amazon down nearly 3%, Microsoft down 1.5%, Apple down 0.2%, Meta up 0.1%. Bitcoin lost the $100,000 mark again, dropping to 98,000 US dollar levels, with Ethereum down over 7%. Crypto concept stocks fell accordingly, with MicroStrategy down over 7%, Coinbase down 6.9%. Disney Q4 earnings grew 1.6 times, but traditional TV business tracked revenue below market expectations, with shares falling 7.8%. White House advisor Kevin Hassett said the jobs report may still be released, but may not include the monthly unemployment rate data. Uncertainty in the outlook may affect the Fed's stance, making December and next year's rate cut chances more complex. After several officials signaled hawkish tones on Wednesday, market expectations for a rate cut next month have dropped to about 50-50 odds, down sharply from about 95% a month ago. Our stock pick today is 3S Bio Inc. stock code 1530. 3S Bio is primarily engaged in the development, production, and sales of biopharmaceutical products. Its core commercialized products include TPO, RHEPO products, EPO and SEPO, Isaipu and Ciptabin, as well as a small molecule drug Mandi. TPO is the world's only commercialized RHTPO product. According to IQVIA, in the first half of 2025, TPO held a 63% market share in mainland China's thrombocytopenia treatment market by sales value. With its two RHEPO products, the group has been the leader in mainland China's RHEPO market for over 20 years, accounting for 41.5% of the total market share. In the first half of 2025, Isaipu was the first tumor necrosis factor inhibitor product launched in mainland China. Mandi also holds a dominant position in mainland China's minoxidil market. The group recently presented at the STIC conference the Phase 2 clinical data for its in-house developed anti-vascular endothelial growth factor (VEGF) programmed cell death protein 1 (PD-1) bispecific antibody, group R&D code 707 injection, in combination with chemotherapy for first-line non-small cell lung cancer, NSCLC. The data showed that 707 combined with chemotherapy demonstrated favorable efficacy and safety in both squamous NSCLC and non-squamous NSCLC, supporting the advancement of 707 combined with chemotherapy into Phase 3 clinical studies for 1L NSCLC. In May this year, the group entered into a license agreement with Pfizer, granting Pfizer an exclusive license to develop, manufacture, and commercialize the PD-1 VEGF bispecific antibody 707 globally, excluding mainland China. The group will receive an upfront payment of $1.25 billion and is eligible for potential payments of up to $4.8 billion in total, including development, regulatory approval, and sales milestone payments, as well as tiered royalties in the double-digit percentage range on net sales of this product in the licensed territories. In July this year, the group entered into an option agreement with Pfizer, granting Pfizer an exclusive license to develop and commercialize the PD-1 VEGF bispecific antibody 707 in China. The group will receive $150 million in non-refundable and non-creditable option and exercise fees. The group also entered into a subscription agreement with Pfizer to allot 31,142,500 subscription shares at a subscription price of 25.2055 Hong Kong dollars per share, for a total amount of approximately 785 million Hong Kong dollars. The proceeds will be used to enhance the global R&D layout of clinical and preclinical projects in the product pipeline, improve production facilities, and for other general corporate purposes. On the other hand, with Pfizer as a strategic investor, it will strengthen the group's shareholder base, further enhance business growth, provide more support and flexibility for the group's pipeline development plans, and unlock greater potential for its assets in the global market. Recommended buy price 32.5 Hong Kong dollars, target $36, stop loss $31. I personally do not hold the above stock.